Welcome back to Yahoo Finance Live. As we see all three major indices in the red, interesting to see Bitcoin holding their gains this week, of course, sparked by Tesla's $1.5 billion investment into Bitcoin. And our next guest says companies joining in on that move could spark another doubling of the crypto in prices, jumping up to potentially $100,000 a coin. Very happy to welcome back to the show Mike Novogratz, a man who gave up his cushy life running a family office to found and become the CEO of Galaxy Digital. He joins us right now. Mike, thanks again for coming on, man. I know we've talked a lot about Bitcoin being digital gold, and a company like Tesla putting it on its balance sheet is an interesting hedge away from cash, but you also talk about it being quite a big marketing boost. So what are you hearing from execs maybe looking to follow Musk in doing the same thing to say, look, we believe in the potential of Bitcoin?
Well, listen, I think you now have Jack Dorsey, Michael Saylor from MicroStrategy, Elon Musk, who've all put Bitcoin on their corporate balance sheet. We did it 3 years ago when we went public up in Canada. And so, three becomes a movement in general, right? And so Michael Saylor actually hosted a conference with like 2,000 corporate CFOs and CEOs last Thursday, where he laid out exactly what MicroStrategy did on how they thought about and went long Bitcoin on one day. And then the second day, he had guys like me come and talk about what our companies could do for these guys. And, you put 2,000 people, at times there were 10,000 people on the line. Somebody is going to say, hey, that seems like a good idea. And so I think you're going to see a movement around corporate treasury for two main reasons. One is the dollar continues to be debased, right? Asset prices are going higher. And so you're protecting the value of your corporate treasury. Now, in general, corporate treasuries are shorter term duration. And so you wouldn't be advocating to put all your money into Bitcoin. But I think you'll see CFOs put some of corporate treasury in Bitcoin. What I also talked about was listening to your customers, right? Bitcoin and cryptocurrencies are the currencies of choice for Gen Z, for millennials, for younger people in this country. And so if you're almost tone deaf to say it doesn't matter, right? It matters to them, right? Now, 30% of Americans own some piece of a crypto. And so it's becoming almost a negative if you don't do it. You're going to see more and more companies, like Tesla said, we're going to allow you to buy Teslas in different cryptocurrencies. Like, it will be insane if you're McDonald's or Bojangles or all these other companies and you don't move the same way. And so I think you're going to see this big movement of corporates, and that just adds to the fuel in Bitcoin.
And, Mike, I guess the follow-up to that would be, for a while, there was a debate about what exactly Bitcoin is, whether it was a store of value or it was actually a currency that could be used for payments. And it feels like we've sort of moved away from the payment side until we got that announcement from Tesla. Do you think that ups the case for that? Or ultimately, is it really just a digital asset that you don't see sort of being transactional on an everyday basis?
I don't see Bitcoin being transactional. I see it being a digital store of wealth, right? A digital asset. I think there are other cryptos that will fight and win in the payment system, right? Bitcoin is going to come out with Diem, which is a US dollar-backed stable coin, and they're going to try to dominate payments, right? There's USDC. There's all these coins that look and feel just like dollars because they're basically dollars wrapped in tokens. That are going to come and participate in that. What's unique and why that's positive for Bitcoin is it's the same wallet, right? We're going to move from a world where your money's held in a bank account to where it's held on a wallet on your phone, and not just your Bitcoin, your stock certificates will be there, your tickets to concerts will be there, and your money will be there that you used to transact in, and you'll be able to flip, seamlessly between them all. That's coming. That's where the big battle is going to be. That's why PayPal got involved, right, with their 330 million users. And so one of the most interesting things to watch over the next 3 years will be that fight over payments.
Well, I want to get into, the decentralized finance space too, and particularly payments a little bit later on in our interview. But I also want to go back to kind of that idea, because Bitcoin, as you've talked about so often, the social construct around it has really been what people have bought into, the idea that this is a stable thing. If you want to go with the digital gold route, which I would agree, payments necessarily haven't played out the way that some people had talked about earlier on. But with Bitcoin, how does that maybe drive the whole space in general once you become comfortable with, the idea of putting dollars into Bitcoin that way, what it does to drive adoption in the rest of the crypto space. As myself, as someone who received Bitcoin first back in 2014 as a gift, it kind of triggers this understanding in the general space. So how do you see it spilling over if we do see Bitcoin 100,000?
We're seeing that same journey happening, and it's happening faster and faster. So the journey is somebody convinces you to buy Bitcoin, and it's very confusing. And you put some Bitcoin in, it starts going up. You get excited, it goes down, you get nervous. And after you make a little bit of money in it, you're like, well, what else is there to look at? And then you start looking at Ethereum. And Ethereum has got a different use case than Bitcoin. It's building this global decentralized supercomputer that processes information on this big blockchain, right? Processes and verifies information. And so you're like, wait a minute, the world's going to be built on this. And so then people put some money to Ethereum. And then the final step is what's going to be built on top of it? Oh, all these projects. We're going to have driverless banks. We're going to have driverless insurance companies. We're going to have, if you think about what DeFi is, it's the driverless bank. And so, there's a little more risk on each step of the way because we're a little bit more less mature, right? Bitcoin's got a mature macro asset now. It's in macro portfolios all over the world. There's no changes to the Bitcoin protocol that are going to be happening anytime soon, right? So you know what you get. Where Ethereum is still being built on the fly. It's being built at a rapidly accelerating pace as more and more people participate in it. And the DeFi stuff is really kind of venture sandbox stuff, right? This will be the future in 3, 5, 6, 10 years, but it's not the future today. And so you move across that spectrum and you move higher up the risk spectrum.
Mike, going back to your comments there on Ether, I wonder, with CME futures launching, how far do you think that goes in sort of growing Ether to being accepted, if that's the right word, in a bigger way? I mean, how significant is that move, you think? And ultimately, does that accelerate the adoption?
I think it certainly accelerates people getting excited about it and price going higher. What will accelerate Ether's adoption, and Ether in the long run will be valued, just like Facebook got valued as a network. So the more people that build on it, the more people that transact on it, the more people that are part of the Ether community will drive that price up. And so you can look at that chart and you can look at adoption of Ether, and they should be really correlated. I'd be lying to say there's not some store of value in Ether, right? Some people look at it as silver to Bitcoin's gold. I think it's the wrong way to look at it, but who am I to tell people how to look at things? And so, we're in such an early stage of this revolution. You'll have people buying it just because they have no idea how to value it, and they're going to hold it here. It will be an unbelievable, valuable piece of architecture if it fulfills its promise of being this global decentralized trust level.
Yeah, we've heard a few people call for 10,000 already on Ether. That was from Fundstrat. When you look at it too, just real quick, and we want to squeeze in a break, but real quick on Ether, around the futures that Akiko's talking about, we saw a big bust with Bitcoin after futures became tradable. And now that Ether has those too, I'd be curious to get your take on maybe where Ether's price goes.
Yeah, so listen, when Bitcoin future came out, it was literally the peak of the mania in 2017. And it was one of the most poorly timed events. I think there was a lot more of the coincidence than causality in the crypto market, collapsing there. It was regulation showing up. It was also, there was no real understanding what was going on in the space. And so every coin was the next Bitcoin. And you just had this giant supply response to the excitement, and then it collapsed. We're in a very different place right now. We had 0 institutions participating in 2017, literally 0. And today we've got institutions from insurance companies to hedge funds to high net worth and asset management all participating. And, so I think the adoption of the ETH future on CME will happen 10 times faster than the Bitcoin future. And I think it'll be a positive for the price, not a negative for the price, given that listen, it's a little frenzied in the last week or two. And so you could have a correction, but we're not in the bubble. We're living in a revolution now, and we're in early innings of a revolution. Where I in 2017 said this was a speculative mania, it was a bubble. I don't think it is this time. I think we're really seeing real capital, real human capital. And I can tell you at my own company, we are hiring some of the most talented people I've ever worked with almost daily. We will have hired 40 people probably in the first 5 months of the year. That's not because we're crazy, it's because we're seeing all kinds of business coming out.
You've got investments in about 80 countries globally. What's catching your eye right now? And what's the real focus in terms of where you determine your money or where to put your money?
Listen, we've been investing, a long time. And so we've invested in exchanges and custody and all kinds of parts of the ecosystem. What's nice is now a lot of those investments are, they're up in value, they're paying off. There's a consolidation going on in the space, right? Coinbase is getting ready to IPO or not IPO, but to direct list. And, with SPAC mania, lots of the portfolio companies are being, sought out by SPACs. And so that's a hardy part of the business. Where do you put your money today is a different conversation, because a lot of the valuations there have gotten pretty rich. And so what we like to do is look for the best young developers building new programs, new projects. And so it's really mostly in the DeFi space, not only, but mostly in the DeFi space, trying to put startup capital and seed capital into the best projects we can. And so we've got a team that, tirelessly looks through, business plans and meets founders and tries to convince them. And it's interesting. It's not the capital that matters. You've got to convince them that you're going to bring value to their company, because there's lots of capital chasing projects. And so that's really where the new investment dollars go. Listen, there's a big growing credit business at Galaxy. And so having, capital to lend to creditworthy lenders, both in the mining space, in the trading space, is important. When you have this much activity going on, there's just opportunity everywhere you look. And so I think for our longer term investing dollars, it's the smaller groups of really smart men and women that are building projects. But for the broader firm, we're all over the place.
Well, it's interesting to hear you talk about that too, because you said you founded Galaxy, as a bridge between institutions and the crypto community. And I liked your joke that you said eventually decentralized finance might put you out of business as we see more projects like this, attract attention. It was interesting to see you throw 25 million, Galaxy throwing 25 million into Terra Protocol, one of those interesting DeFi payments projects right now. Is that the hottest space when it comes to DeFi? I mean, there's a lot of different things going on with yield harvesting. You got Terra here. What has you most excited about maybe that next project that's easy to understand that's going to get attention?
What was interesting to me about, Terra, and the Luna token and the Terra project was that Korea, that's where they're based and where they started, is always an early adopter, right? They had internet access before anyone else did on a high speed level, and so you're an early adopter there. And I always say the DeFi space is a sandbox. This was like one of the first guppies that became a frog. It jumped out of the sandbox and actually is being used in real world payments, right? The Chai payment system, they jump started it, and now it's starting to, gain market share. And so it's really interesting. It's one of the first, protocols that you're seeing have an impact in what we call real world, right? Because I really believe in 5 years' time, most people aren't going to care if it's a blockchain-based system. They're going to look at the user interface. Is it cheaper? Is it faster? Is it more transparent? Is it more fair? You're going to win customers over by building a better product. All the blockchain stuff is going to be the back of the TV. Like when you watch TV, you don't know who cares how the TV's made? It looks good, right? And so for us, geeks and crypto people, it's a big deal. But really for this revolution to work, the consumer's not even going to know they're playing on a blockchain-based system. Right. And so I think Terra is a really cool example of one that's making that jump.
Hi, Mike. I wanted to get your take on the regulatory side, kind of circling around, albeit the boring side. But we got Gary Gensler at the SEC. FinCEN had some regulations coming out at the end of the year, caused some consternation. We got the Ripple suit. How does all of this portend for the coming year or 2 years in blockchain-based and crypto-based currencies, especially considering that we've been on pins and needles here for years waiting for a Bitcoin ETF in the US?
Listen, I think it's an exciting time for the space. I am thrilled that Gary is the head of the SEC. Full disclosure, we worked together at Goldman Sachs back in 1997, 98. It tells you how old I am and how old he is. So he's got more hair than I do. Not much. Listen, Gary taught a class on blockchain at MIT and on crypto. He understands it cold. He is progressive, right? And progressives broadly are going to go after, you would think, go after the rent takers. Crypto is not a rent taker, right? Crypto is trying to disrupt the rent takers. So I think philosophically he should be biased positive, but he's also, tough. And so when he's going to, look at, the Ripple XRP thing, he's already kind of commented when he was at MIT on what he thought about it. And it wasn't, friendly. He said, smells like a duck, quacks like a duck, looks like a duck, it's probably a duck. And he was, referencing if it looked like a security. And so I don't think he's going to be a pushover for our space at all. I think it'd be fair. My guess is we get a ETF this year, right? Right now, the next best thing is the Grayscale Trust. It's a giant, $20, $30 billion ecosystem now where retail investors buy at a 20 to 25, 15% premium and pay high fees. Mm-hmm. That's, if the SEC's job is protecting the little guy, that in no way is protecting the little guy. Like they wouldn't let an ETF in this space, but they'd let that in this space where hedge funds arbitrage retail. Again, if I'm Gary Gensler, I'm like, well, who thought of that was a good idea? And so my guess is the ETF comes out pretty quick. The FinCEN comments were also fascinating because they had a 14-day comment period, which is not normal. It's usually 40-day. They were so overwhelmed with comments and quality comments and well thought out comments. Every single crypto business I know, put a comment into the space, but people we don't know, thousands of them did, that they had to say, whoa, wait a minute. And I think there's something really unique in this shifting right now. Crypto is becoming a political story, right? Mm-hmm. Imagine you're a politician and you say, screw Bitcoin. Well, there are a lot of single voter issues, right? 30 million Americans own Bitcoin. And when you look at Gen Z and millennials, a lot more as a percentage, 50 odd, 60% have some access to crypto. And so I think politicians are going to be much more careful about how they talk about crypto, what they say about crypto, how they regulate crypto, because they don't want to have their voters turn on like the swarm. FinCEN got hit with the swarm,
And I think, as you said, in your discussions with Gary Gensler, it sounds like he's kind of in that same boat in your discussions with him back during those lectures on crypto at MIT. But I appreciate you coming on here, man. I love having you. One of the greatest voices in the space, Mike Novogratz, Galaxy Digital founder and CEO. Thanks again for coming on. Hope you come back soon.